Hello and welcome to our stream today. I'm looking forward to showing you all how we're going to get funding flipping for house flipping. So if you're interested in investing in real estate, and hopefully the description of this showed up properly because I had some issues with this new software we're using. But today we're going to talk about the entire gamut, the entirety of everything you need to know about getting funding for house flipping. Look, there's a lot of different kind of funding specifically to this purpose. You want to set up your business the right way. Business credit, there's so many different ways to get the money that you need. And today, this is exactly what we are going to be talking about. I'm just kind of a little distracted because I'm trying to make sure. I think I actually took the details from the last live session that we did and made it for this one. But anyways, so today it's all about funding blueprint for house flipping. We got a lot to cover today, so let's dive in. Okay, so first of all, where do you see your house flipping in 5 years? Are you going to hire people? You need something else, replace equipment, double your revenue. Depending on what you're going to do with the house flipping business, it's going to determine the capital you need. Really, there's a lot of different ways you can get into house flipping. You could buy and hold, meaning you could buy properties, then you could fix them up and you can keep them and rent them. You could also fix and flip, or you fix them, you flip them. There's a lot of different models for house flipping. You got to kind of figure that out because that's going to determine the type of funding that you actually may need. So what's step one? Well, the very first step, and I'm going to kind of break this up into phases of the growth of your business, all the way from when you exit, sell the business to when you get the business set up right from the beginning the right way. So the very first setup of a house flipping business is you're basically going to come in and set up and launch the business, right? This is the first 6 to 12 months. This is where it all comes down to fundability, which I talk about a lot. I'm going to skim through this today, but this is where you got to get the business set up the right way. Remember, what you do here in phase one determines your ability to be able to get the proper amount of funding in the future. So you've got to get your fundability right. The fundability right is what makes it practical and probable for you to be able to come in and be able to get the funding that you need, whether it be business credit or other kind of financing as well. So you got to get a business name, for example, that's set up. And you preferably, you don't want to put house flipping or anything that indicates you're flipping homes in the business name, because that's going to put you into a high risk industry. So you got to get set up with the Secretary of State. Now, I've walked through before that my steps for this are dramatically different than what you normally would expect. Meaning I go and make sure that the company name I want's available in the state. I grab the domain from GoDaddy when the domain's there. Or I don't set up a business if I can't get the domain. If I am able to come in and get the domain, then I'm able to come in, I get the domain. Then I go back, I get my address, I get my phone number, then I get set up with Secretary of State. This way, when I set up my Secretary of State record, I have the right address, the right phone number, the right email, the right website, all right from the beginning. Then after I get set up with the Secretary of State, the next thing you do is grab the EIN number. And the next thing you're going to do is go set up that business bank account. Now, remember, we talked about addresses. You got to get a real physical address for the business. If not, you want to use a virtual office. Stay away from virtual addresses. The difference is a virtual address is a PO box. It's a UPS address. It's an iPostal. A virtual office, a real virtual office, is Regis, Da Vinci, Alliance. Okay, so these are virtual offices that make it look like you have a real, a big shop in a big retail high-rise building in Tampa, Florida, when you're really just working from home. So you don't want to use a home address. You can. Some sources won't give you funding. Like Walmart makes it really difficult to get a corporate credit card with them with a home address. Or Amazon doesn't. So to give you some examples, home address can hurt you and it's never really going to help you. So if you can get a virtual office, you want to get one set up right away. Now, DL actually mentioned a couple comments here. He says, hey, mortgage officers that say you shouldn't handle any loan if you want to buy a home. What happens if you build up your business credit profile? Look, mortgage officer's job is to get you a mortgage, a home loan, right? A lot of the funding we're talking about today isn't through a typical mortgage broker. Credit line hybrid, business credit. This isn't stuff typical mortgage brokers work through. If you're going to get a regular mortgage on a house deal, it makes sense. Go to a mortgage broker to get one. But any of these other kind of funding, most mortgage officers aren't going to offer this kind of funding. You're also asking, hey, does having $20,000, $50,000 in loans, your credit profile, make you look more fundable? Absolutely does. This is why you build business credit. A lot of business owners make a mistake of not building business credit, not getting credit cards that report on their business credit reports, not getting loans that report on their business credit reports. The problem with that is when you go to get a loan, a credit line, a car, a credit card in the future, then the issues that occur is that you're not getting credit. Lenders and credit issuers can't see you've got all this other financing and paid it back as agreed. So you always want to do that. That is what is going to help you establish a business credit that's going to make you more fundable. And Shandi is coming in from Columbia, South Carolina. If you don't mind, everybody, give me a shout out. Say hello. Just tell me where you're coming in from so I can be able to say hello to you. Okay. So that being said, you want to set up your business entity. You want to set up your EIN number, right? Your entity that we talked about is going to be corporation, LLC, whatever it may be. I recommend a corporation. I recommend an LLC. I'm not an accountant. I'm not an attorney. This isn't legal or accounting advice. But those are what I found limit your liability the most. So get an LLC, set yourself up as a corporation. Those are going to give you the most credibility. NAICS codes for house flipping, 2236118. This actually covers residential remodelers and general contractors. So that might not be what you choose, right? You might choose another one. But this is an example of an NAICS code you can use depending on if you're doing a fix and flip, right? Or are you actually doing a buy and hold? So the NAICS code is going to be different. If you don't know what an NAICS code is, an NAICS code is basically your industry code. It's what tells the IRS, the Secretary of State, or it's what tells the SEC. It's what tells the credit bureaus, lenders, credit issuers, insurance companies, all these people that deliver loans, credit lines, credit cards, insurance policies. They all need to know the industry you're in because risk is different for all different kinds of industries. So you got to have this NAICS code figured out. And a lot of people don't do this until it's too late. You don't want lenders, credit issuers, bankers to decide this for you because they'll always put you in a high risk category. And it's going to make it more difficult for you to get money as I get to other phases here that I'm going to walk you through. So you can choose your own NAICS, but 236118 covers residential remodelers. All you have to do is go to NAICScodes.com and you can easily find the right one that works for your industry. Okay. And remember, flipping, fix and flip, all this kind of stuff. You got to keep us out of the business name. You got to keep away from NAICS codes as much as you can with that because that's just going to put you in high risk industries. If you can get a business license, get one. It's different on every state that you're in. You can easily do a Google search. Hey, house remodeling. Do I need a license? You know, in California, you need a license for everything. That state spends so much money, they got to make it wherever they can. So you got to have a license to be able to do any kind of remodeling in a place like California. Florida requirements are different. So depending on the city, the county, the state that you're in, you might need licenses here. You very well could need licenses. In this industry, when you're rehabbing homes, you absolutely are going to be required to have licenses in certain county states. So you need to look into this in the county that you're operating, in the state you're operating, and see if you need licenses to be able to do what you do. And by getting a license, it gives you a bunch of credibility and makes you more fundable as well. So get your business phone number set up. List the phone number with 411. Get it to be a toll-free number. Places nowadays like Ring Central, like Freedom Voice, make it really easy and cheap for you to get a separate business phone number set up for the business and do all the stuff as well. Get a website set up, get a professional domain, stay away from Wex, stay away from Weebly. You need to own yourdomain.com to give you any kind of credibility. And it's going to help you down the road when you actually go to grow and scale the business. We talked about business bank accounts yesterday. Set one up in your business name. A lot of reasons you want to do this. Credit scores like check systems, a bank rating that is an internal credit score used by the actual banks. They all look at how long your business has been open. They look at the longevity of your business based on how long your business has been open. So, or bank account's been open. So open the bank account as soon into the process as you can, even if you don't plan on using it. Make sure that all of your information is congruent when you do it, the name, the address, the phone number, the NAICS code of the business. Make sure you know all this before you set up the bank account. So that way the bank account and the information on it is congruent with everybody else as well. And we're going to want to get set up with the credit reporting agencies as well. Before I get into that, I want to come back and say hello to Eugene. You said hello. Thanks for coming in and saying hello. Miami's in the house. What's up? Thanks for saying hello. Darian, thanks for coming in from Detroit. Hello. And Ed from Tampa Bay, Florida. Tampa Bay. I love it. You're local to me, buddy. And then Sandra says, what do you think about Opus? Opus is a great virtual office, one I looked into. That was actually suggested to me on a live stream. And I actually looked into it and thought it was an amazing way to be able to get an actual virtual office for your business. So Opus is another great potential solution as well. Thoughtful Addition says, is it possible to get grants for funding if the sales of the company are below 25 grand? Absolutely. There's a ton of grants available. And if you go to youtube.com/credit suite, you will find I've done training on a lot of different grants that will get you everything you need at no cost to be able to get in the door with grants. There's also a great guy called Chris Johnson. And Chris Johnson is one of the foremost grant experts in the country. He's come on our challenges before and talked about grants. So there's a few resources that can help you. Derek, Indianapolis. I'm from Indiana, man. I'm like 45 minutes northeast. Indianapolis is my hometown. Thanks for saying hello. And Mr. Mosley from Chicago coming in. Thanks for saying hello. So the next thing you want to do is you want to get this business set up with their business credit reporting agencies. You could do so by getting something like a DUNS number. A DUNS number is 100% free from Dun & Bradstreet. You can go to creditsuite.com/DUNS to get it. You need 3 accounts reporting to Dun & Bradstreet to create a Paydex score and a credit profile. Don't worry. I'm going to give you an overview of how to do that during today's training as well. You're going to need to build business credit history, Paydex score, IntelliScore, Equifax's credit risk score. And all they do is depict how you pay your bills. So all you've got to do is get payments that report to them through all different kinds of vendors. We'll talk about that during today's training as well. And then pay those accounts on time or early. That's going to give you 80, 90 scores or higher, which is what many lenders, credit issuers want to see. And that's considered to be good credit with the reporting agencies. Now, you're going to want to build business credit because if you're getting into house flipping or into real estate investing, you typically are going to have 2 main strategies. You're either going to buy property and hold it. You're going to buy it and rent it out. We're going to talk about how to get the funding for that strategy today. If you buy it and hold it, you're going to have all kinds of repairs that are going to be needed. You're going to need to rehab the property. You're going to need to get equipment. You're going to need to get furniture. You're going to need to get like silverware and all the stuff to be able to furnish it. Stuff's going to break. People are going to break your stuff. You're going to have to get carpets cleaned and new carpets and new flooring. All of this stuff can be paid for by business credit, all of it. And why that's important is that we've got to keep 2 different kinds of funding here. We got to keep funding to maintain the property. Now, the other kind of financing or the other kind of house flipping is house flipping, right? Instead of buying and keeping a property and renting it, we're going to buy it, we're going to fix it up, we're going to flip it. Well, fix and flips are the same way, like Home Depot and Lowe's and all these places. You're going to get all the materials you need to fix up a property to rehab it. You can use business credit for. You got to build business credit because business credit takes that part of this out of the equation. What I mean by that is that you can use business credit to either maintain the property or rehab the property, depending on your investment strategy. But that keeps your credit lines, your loans, the other funding we're going to talk about today available to buy property. You got to have funding for the purpose of buying property. You got to move quickly when the right deal is there. But then you got to have other funding that you're using to rehab and maintain the property. The reason you don't want to use your funding that you're going to use to buy the properties for rehabbing, maintaining it, is you got to keep as much money available to buy new properties. And there's no reason you want to use credit lines for that when you can use business credit cards to rehab and maintain the property. So think of it like that. There's kind of 2 different silos of funding here. A silo that's going to rehab the property and maintain it, and a silo that's going to buy the property. We need to keep as much funding in the silo, in the bucket, to buy as we can. So in doing so, that means we're going to take business credit cards and use it for the rehab and maintenance to leave plenty of cash available for us to be able to come in and buy properties. So we got to start building business credit. We've done the fundability already. We're going to get started with some starter vendors: Granger, Marathon, Uline, Home Pro, Home Depot Pro. Okay. So what's nice about these is these are all used perfectly for the purpose of rehabbing and maintaining properties. Home Depot Pro, or what's also known as Supply Works, Marathon, Uline, fuel, shipping supplies, outdoor supplies. All this kind of stuff can be used for the maintaining or rehabbing of properties. And if you get credit with these credit issuers, they'll give you credit even when you have none. Even if your bad personal credit's bad, even if you don't qualify for loans or credit lines, you can still get all this kind of credit. And then it starts building a business credit profile for you, which is going to be important as we get into other phases of funding here. Okay. So Granger sells outdoor workwear, electrical supplies, Marathon, transportation fuels, asphalt, specialty products, etc. And again, they report to Dun & Bradstreet, net 15, net 30 type of accounts. If you're getting Marathon, Wex fleet cards, like fuel cards, they may require a personal guarantee or $500 deposit till you have some accounts on your business credit reports first. Uline, they sell shipping, packaging supplies. Home Depot Pro, obviously, we're familiar with what Home Depot sells. Okay, a lot of them will give you credit when you have none. The better your fundability is set up, the less need for personal guarantees and for time and business requirements. Okay, and business credit building cards with a personal guarantee. We'll talk about some of these today. There are options where if you want to provide a personal guarantee, you can get them faster. So if you want to get Home Depot and Lowe's cards right from the beginning of building business credit, you can, but they would require good personal credit or guarantees. If you don't want to give a guarantee or have good credit, then don't get those right away. Get some of the starter vendors I just showed you, build initial business credit, then come in and get Home Depot, Lowe's when you have 5, 6, 7, 8 accounts on your business credit reports. That'll get you around these personal credit checks and these personal guarantees. Now, we'll talk about some funding here also available with good personal credit. If you have good personal credit, then what you want to get here in phase one is credit line hybrid. You can get this as a startup. You can get it as a brand new business. If you have an entity, you can get it. And all it requires is good personal credit. You don't have cash flow. It's no doc. There's no tax returns. There's no bank statements needed. It's unsecured. You don't need collateral. You don't need assets. Most of that stuff that will prevent you from qualifying for funding, it's all gone. All you need is a guarantor with good credit, or you have good credit. Look, there's a lot of people out there that are willing to let you use their credit or their funding to do the work. They just want a rate of return on the money, and they don't want to physically organize the project. They don't want to do the work. So you might be able to have a family member, a friend that is just going to let you use their credit to be a guarantor because they're generous. But then there's a lot of other people that would let you use their credit to be able to get credit lines to help you because they want a rate of return. Like they're going to get a rate of return on the actual money that you're going to make. So my friend Sarah, a really good friend of mine, her and I travel the world, her and her husband Theo. Theo's awesome. And her business, what she does is she actually buys apartment complexes, big ones. So she pulls money together from people like me that want to get a rate of return on my money. She goes and does all the work, finds the apartment complex, due diligence, does the purchase, does all the work, and I get 8% return on my money just for fronting the money. So there's plenty of people like that out there that all they want to do is just get a rate of return on their money. They don't want to do the physical work. They'll gladly give the money to somebody like you that will do the work if they get an 8%, 10% return on whatever the profits are, whatever it may be. So you can use your own personal credit to get credit line hybrid. You can use a family member, a friend. You could use another potential investor. But this is the best program for house flippers I've ever found. And the reason for that is that it's no doc. There's no income docs needed, right? It doesn't care about industry. So even if you're high risk industry, it doesn't matter. You can get it in the very beginning of a business and you can liquidate these cards. So what this means is it means I get 0% funding for up to 18 months. Then I can liquidate it, which means I can take the cash out of the cards. Now, why does this matter? It matters because I can't use a credit card to buy a home. I can't do it. Title companies won't let me close that way. So I can't go, oh my gosh, there's this great investment property for $100,000 in Florida I want to buy. Title company, here's my Visa card. I have a $100,000 limit. I want to buy it. They won't let me do that. But with credit line hybrid, I can get these credit lines for $150,000. I could liquidate them, take the cash out of the cards at 0%. Now I've got the cash I need to buy property, and I've got the cash 0%. Okay, so it really gives you the ability to actually come in, be able to get the cash that you need to buy the property. So let me give you a perfect example of how to build a scalable business investing into real estate using this. A buddy of mine, Brandon, does this. This is his entire model. What he does is he uses credit line hybrid. He goes out, what he does is he teaches people how to actually get cards through credit line hybrid. We just have a source that does it for you. Okay, gets the actual credit lines, cashes out, buys a property, okay, then fixes up the property using business credit, then puts a renter in the property, okay. Now bought it using credit lines, like a program like Credit Line Hybrid, fixed it up, put a renter in there, then gets a mortgage, cashes out the property. So gets a mortgage. Now I got my cash back. I pay off Credit Line Hybrid, rinse and repeat. That's what happens. Now he's got a property in there. Now he's got a renter. The rent covers the mortgage payment. So the renter is making me a profit every month and covering the mortgage payment, paying off my mortgage for me. I got my cash back out of the property. Now I used it to pay off my credit line. And now I turn around and do the next property, the next property, the next. Okay, so there are entire strategies for real estate investing just using this one funding program. Keep in mind, I'm going to talk about 10, 12 different ways to fund your investment, your real estate flipping or investment business. But this is just one, and somebody that's taken one product and built a massive 7-figure business, flipping or keep buying homes and getting all of this residual income, of which he travels the world and does the coolest things, all because of one program. So it just goes to show you the power of what this can actually do. Sandra says, is post-construction cleaning companies considered high risk? No, it is not. And if you want to go in, yeah, and this is Burr. It says Burr method. Yeah, I love Brandon. This is Brandon's method. He's been on my podcast. We brought Brandon in for a challenge to talk about this method. Is a fantastic, great guy, really smart guy, really good program. And so that being said, back to Sandra's point. Sandra, if you want to know what is high risk, you can go to search high risk NAICS. And I've got a blog post on it. We've also got NAICS.com gives you a list of high risk industries. It's really simple. Just search high risk NAICS and it's going to give you everything you need. So in phase one, you can also use 401k financing. This is when you use stocks, bonds, IRAs, 401ks. And then from doing that, you're able to come in, borrow against those, get as much as 100% of the value of a 401k loan or credit line as low as 5% interest. Stocks and bonds, you can borrow as much as 90% of the value of those. You can still keep funding invested in the stocks and bonds and use them as collateral. This is the best kind of funding I've ever seen for businesses. And here's why. If I have my money invested in the stock market, I'm getting a rate of return from that money. I can use securities-based financing, borrow against, get a credit line against the money I already have invested in the stock market. I'm still invested in the stock market. I'm still earning a rate of return on that money. Then I'm leveraging it, even though it's already making money for me in the market. Now I'm leveraging it to get a credit line that I'm now using to be able to get the money I need to buy properties. Now, the other reason I tell you this is that, again, 75% of business owners get money from family and friends to start a business. But instead of getting cash from somebody, it's easier if they have stocks to let them leverage the stocks to get a credit line to do what you need to do to getting cash. So I use the example often. If I wanted to launch a real estate investment business, I need $100 grand. If I go to my dad to get that $100 grand, he's going to cash out his stocks, pay all kinds of penalties, lose all kinds of money. But I can go to my dad and say, hey, there's this great program called securities-based financing. I just leverage your stocks, get a credit line, can do what I need. You still keep them invested. You still earn a rate of return. Only way you lose that is if I default on the credit line. Then they'll take the stocks. But he doesn't lose unless I default. And if he gave me $100 grand in cash, he'd still lose. I defaulted, never paid it back, right? So this is a great alternative way to use assets you may have or somebody else's to get the money that you need to actually come in and to be able to buy initial properties. Okay, now you also can sell part of your flipping business. This is called equity investing or equity debt or equity financing. So there's two kinds of financing you're ever going to get in the business world. There's what's called debt financing. These are credit lines, they're loans, they're credit cards. They're a bank, somebody gives me money, I owe them back. I usually pay them fees. I usually pay them interest until I pay them back. That's debt financing. We're familiar with loans and credit lines and credit cards. It's how all debt financing works. Then we've got what's called equity financing. I am selling them equity in my business in exchange for the money, and I don't have to pay them back until the business sells. And then the business sells, and I pay them whatever their percentage of ownership is. So this is debt I never have to be paid back. Again, I've got a partner, I've got ownership interest in the business, but again, I'm not taking on debt. So crowdfunding works good for this. For example, there's a lot of crowdfunding sites out there for real estate flipping specifically that are just for real estate flippers. So you can go in and be able to crowdfund or get people to basically take equity ownership in your business. They'll give you the money you need, and then they just want to get a rate of return. Some of them just want to earn interest on it, debt financing. Some want to actually get ownership interest in your business. But either way, they're basically saying, I don't want to do any of the work. I just want to get a rate of return. I'm willing to front the cash if you're willing to do the work, and then we both win. So crowdfunding is a way to get that too. And again, too many. I think I've got entire training just on crowdfunding for real estate investors at youtube.com/credit suite. You can check out. There's a lot of this available out there. So you want to check this out for sure, because this is a way that you can crowdfund or get money from people that don't want to do the work, but will front the money so it doesn't have to come out of your pocket. Grants. We actually had grants mentioned today. Grants are a great free way to get the money that you need. And a lot of times they're available. There's two main places to go. You want to go to grants.gov. Grants.gov gets you access to all kinds of federal grants, which is the majority of money that's in the grant system. And then you can also go to grants. Go to grants.gov, and you also can go to Grant Watch. Grant Watch is all kinds of local grants, community grants, county grants, state grants. You also want to look deeper at a county level. Look, in a lot of cases, there are grants that the county or the city or the province or the state that you're in will give you to do this kind of work. So think about it. I'll give you an example. I'm from a small town called Elwood, Indiana. Most people don't know about it. Small farming community, 45 minutes northeast of Indianapolis, right? So in my town, there are a lot of older, abandoned, decrepit homes that clutter the main streets of the town, right? Well, the town spends money destroying that. They have to like get permits. They have to go in. They have got to destroy the property. They got to move all the debris somewhere else. Then it's a vacant lot. They don't want to do that huge cost. So what they'll do is they'll have grants. They'll give somebody that's a real estate investor that will do that for them. Hey, I'll give you $25,000 grant if you're the one that comes in and either rehabs the property or destroys the property, removes all the stuff. It's cheaper for them to give grants than it is for them to do the physical work, and everybody wins. You get money to be able to do what you want to do with real estate flipping or investing, and they get they spend a fraction of what they would have spent to actually do the work, and they get that property taken care of. It gets rehabbed, it gets fixed up, it looks better, or gets destroyed and something else built in its place. All of it helps the value of the homes around them. So you want to look at state, county type of incentives too. A lot of grants that can help you in that area. Now, we're through phase one. Phase one's getting your business set up, getting the funds we preliminarily need to start buying real estate. It also is getting business credit to start to be built. So when we start accumulating real estate, we have the money that we need to be able to repair, maintain these properties as well. And Billy, I appreciate this. You're on point delivering this info. I appreciate that, Billy. Thank you. And leveraging stocks is a new strategy, maybe, says Jess. Yeah, look, it's really brilliant. And you know what I like about this, Jess, is that there's a lot of strategies where you could use assets of any form to get money. Matter of fact, if I look at the classes of money for us as business owners, right? There's business credit cards, and there's, you know, loans based on our cash flow and loans based on our credit. The biggest category is what's called asset-based lending. It's using equipment, stocks, bonds, 401ks, IRA, any kind of asset as leverage to be able to get funding. So it's a really good strategy, especially that is very popular with real estate investors. So now we're to phase two, right? $1,000 to $10,000 of money, especially recurring money. So now we're looking at business credit cards without a guarantee. Now we're looking at advanced vendors that will give us the help that we need, but they don't report to the reporting agencies. This is where we might need vehicles on the road, right? So we might need to come in and start getting vehicle financing. We need to start managing our cash flow, et cetera. So for example, Ford Commercial, we had a client that bought a $185,000 truck at Ford without a personal guarantee or credit check. When you have about 14 accounts on your business credit reports, you can get away from personal guarantees or credit checks. Now, Ally Bank, GM, Toyota, Ford, they all offer financing for trucks with a personal guarantee. They also offer all of them offer financing for trucks without a guarantee. So keep this in mind that you can start going into this phase to get Ford, GM, Toyota, Ally Bank, or you can even wait till you have more accounts on your business credit reports and be able to get financing through these sources without personal guarantees, without personal credit checks as well. Now, at this point, we're going to start to build more business credit. Now we start to get into retailers. We get into Home Depot. We get into Lowe's. We get into Northern Tool. We get into United Rentals. We get into Amazon, right? These are sources that are really going to help us rehab or maintain properties. So now we've got the money we need in phase one to buy properties. Now we're building our business credit. Because our business credit's getting built, now with 5 accounts on our business credit reports, we can start to qualify for all these guys. And they will offer the services that we need with high limits, oftentimes $5, $10, $20, $30,000 limits. You get this stuff 1 month into building business credit, 1 month. So 30, 60 days into building business credit, you're getting $5, $10, $20, $30,000 limits at these retailers that you're then able to buy the stuff that you need to maintain or to rehab the properties, right? So we look at Quill, they sell office supplies. We look at United Rentals. They're the largest equipment rental company in the world. You're going to need access to equipment to rehab properties, right? They report to Equifax, net 30, net 45 terms that give you time before the money has to be paid back. Home Depot, obviously, we know what they do. They report to all 3 reporting agencies, D&B, Equifax, Experian, all commercial reporting. Northern Tool report to D&B and Experian. They'll give us at this phase net 30 accounts. Home Depot will give us net 30 or revolving accounts, giving us 30 days to pay back the money, or revolving accounts. Amazon, right? They sell everything you could possibly think of or want. They have revolving accounts in net 55, so 2 months to pay them back. D&B and Equifax is who they report to. And we also look at cash flow management right now. We've got money coming in. We need to manage that cash flow. Well, we can get accounts with Brex or Divvy to help manage expenses, and they both report to the reporting agencies. So we're actually able to build business credit while managing the expenses of the business as the business continues to grow. I really am fans of Divvy or Brex because they're helping us come in and build our business credit at the exact same time. We're able to come in and get access to real services that are really helping us as well. Okay, so funding options in phase 2. Now we've got some cash flow. So now we start looking at cash flow financing, merchant cash advances, revenue, lending, lines of credit. You know, we even talk about equipment financing as well. Things like this happen in phase 2. So, so if we look at this, if we look at phase 1, we don't have revenue yet. We're pre-revenue. So we've got to rely on our credit to get money. We got to rely on stocks, bonds, 401ks, IRAs, assets to get money. Now in phase 2, we start to get some money in the door. Now we got money going into the bank account, revenues coming in. So now this opens up a second type of funding called cash flow financing. So one of the most common types of this kind of financing are called MCAs or merchant cash advances. With a merchant cash advance, we can basically get as much as 15 to 30% of whatever we process in annual credit card transactions. Visa, MasterCard, sometimes Amex Discover. If we're accepting credit cards, we can leverage those credit cards to get money. Fast money, easy money, personal credit doesn't matter. We don't need collateral or assets. I can get funding in 72 hours if I'm processing a lot through credit cards, right? Now, we might not do that. We're in the business of actually investing into real estate. Our renters may pay us with checks, not with credit cards. So in that case, then we want to look at, which by the way, going back, if we're going to let our renters pay us with credit cards, well, then we want to start accepting PayPal, Square, Stripe. PayPal, Square, Stripe open up 3 more funding options for us in this phase. So now the money going to our PayPal account or our Square account or our Stripe account, we can borrow as much as 30% of whatever's going through those accounts. And we can get set low fees, $500 or less, no interest. Credit doesn't matter. So now that we've got credit cards coming in, we're processing payments through these online sources. That opens up funding. Now they may pay us with checks. That's when revenue lending comes in. That's where On Deck and all these revenue lenders come in, where they'll look at the money that we have in our bank account, the money going in there, and they'll give us 15, 20% or more of what's going in that bank account. Cash credit quality doesn't matter. Collateral doesn't matter here at this point. Okay. All that matters is that we've actually are coming in and we've got consistent money going to our bank account and we're managing the bank account responsibly. Yesterday, we talked about bank account management. So we want to come in and we want to make sure we're managing the bank account responsibly. If we're doing that, then it opens up revenue lending. It also opens up places like Fundbox, creditsuite.com/Fundbox. It also opens up Bluevine. Fundbox and Bluevine are very similar. You can get up to $150,000 in real credit lines, really cheap if you keep the money outstanding for a very short period of time. So I get $100,000 through Fundbox. I get $100,000 through Bluevine. Now I got $100,000 through Credit Line Hybrid, $100,000 through Fundbox, $100,000 through Bluevine. I got hundreds of thousands of dollars in money I can use to buy properties here. Industry doesn't really matter with Fundbox. Credit, not really a big deal. 600 credit scores, Bluevine and Fundbox were okay with. You just need responsible bank account management. So in this phase of growing the business, these credit lines become available, which are perfect for you to be able to get the money you need to start scaling the business as well. So very important. Now, Eugene says, so after you move from vendor to the next step, do you stop using your vendors to get rid of these services? Well, that's a really good question. And this is the answer. The technical answer to your question is you'll stop getting credit for it on your business credit reports if it sits dormant for 12 months. So if I got a Home Depot account, I don't use it for 12 months, it's going to stop being calculated into my score. It's not going to show a recent amount of credit that I've recently used on my credit. I'm just not getting credit for it at that point. So I always recommend to clients every 6 months, if you want the account to help you with business credit building, use it for something every 6 months. Now, my other answer is I'm really big on loyalty. Like loyalty is like my number one trait factor in life. And so as a result of that, I still get stuff from Quill because Quill gave me a starter account when Staples wouldn't. So I still buy stuff from Quill today because they're comparably priced to Staples in office supplies. And Quill helped me when Staples wouldn't help me. So I still have loyalty to my starter vendors because they gave me credit when nobody else would. That's your call or not, but that's how I view these things, how I look at these things. Now, DL says, does high limit loans on the personal side help or hurt your credit profile? Well, a third of your credit help and hurt, really, depending on when you get the loan. A third of your credit score is based on utilization. Here's what most people don't know. Consumer credit, when we hear about utilization, we think about credit cards. We're like, okay, we're talking about balances in relation to limits on credit cards. That's not true. Utilization in the personal FICO score takes into account installment debt as well. So if I get a mortgage or a car loan, I get a car loan for 100 grand, or mortgage for 100 grand, I owe 100 grand, right? And I got a loan for 100 grand. So it really hurts my score because my what I borrowed is close to what I owe. So in the beginning, it's going to lower your scores, but it will help your credit overall in time. And the more of that you get, the bigger things you can buy, right? I mean, eventually, if you're successful, then you want to buy yachts, or buy airplanes, or buy multi-million-dollar homes. You can't get that stuff unless the amount of money you're financing climbs. So on the business and personal side, great question, DL. You want to continue to get those higher limits. That's what's going to get you higher and higher future limits in the future and help you buy more stuff. So now we're at $10,000 a month to $2 million in revenue. And now this option, we want to continue to build our business credit profile. We want to look at that financing without a personal guarantee. We want to get to really SBA loans, term loans with longer term. Okay, so there's a lot of things that we want to do here. Now, we want to start looking at alternative lenders. These are called fintech lenders. They're called online lenders. They go by a lot of different names, fintech being most common. 90% of funding in the business world happens from these guys right here. It's not your Bank of America. It's not your Chase. It's not your SBA loans. 90% plus of funding comes from this segment. So this is where we start to look at online lenders, right? People that do just focus on cash flow. There are house reseller lenders that you can get even in the beginning. And I don't know why I didn't mention this, but from the very beginning in phase one, there's funding out there called house flipper financing, house reseller financing. Goes by a lot of names. Even as a starting investor, a brand new starting investor, you can get 100% of the money you need to buy and rehab properties, 100% of it. Okay, even if you don't have any cash reserves, we've got funding sources that will help you there. So house reseller programs, they can work at the very beginning. They also work really well in this phase with alternative lenders. And there's all kinds of alternative lenders as well, depending on if you have good credit or you've got assets or you've got cash flow, will determine what kind of lenders you look at. Then we go to traditional banks, SBA loans, SBA credit lines. SBA has a program called CAP lines, which is their credit line program. We can get contractor lines, construction lines that are specific for the purpose of getting into real estate. We can get an SBA 504 loan here to actually be able to buy properties. So we can start getting SBA funding that we need to be able to get in and buy properties, even funding to maintain those properties. SBA even has specialized funding for equipment, for utilities that you may get. Okay, but they require good credit, cash flow, collateral. You don't have that in phase one. You've got it in phase three. So now we can start getting longer terms, lower interest rates, which means our payments get lower. So cash flow financing gives you short term. So because the term is 3 years with cash flow financing and 30 years with SBA loan, you can finance a lot more with SBA and have way cheaper payments because the term is so long. So that's why we want to work up to. We want to get term loans. We want to get SBA loans. We want to get credit lines in this phase because this gives us longer term financing. We can buy more, expand our business, and keep our payments low. We also want to continue to build our business credit, Tractor Supply, Clear Card. These are credit card issuers that will give you credit in this tier 3. You've already got, 15, 14 established business credit accounts. And these are credit accounts that you can use to be able to, at this point, you're actually being able to get in and buy properties with Visa, MasterCards without personal guarantees. You're able to get financing for automobiles without personal guarantees. We're able to get vendor credit at vendors without personal guarantees. Most of them are available here. So places like Tractor Supply that report to D&B and Equifax, or a Clear Card that reports to all three, for example, you're able to use in this. Now, you're also able to use Sam's Club, Sutherland's, Menards. I mean, this is the kind of stuff you're going to use to be able to rehab property, to maintain property. You're able to get all of that in this tier, preferably with 14 accounts total, 14 payment experiences, or 9 accounts. The difference is that an account could report to multiple reporting agencies, and that counts as multiple payment experiences. So Clear Card here reports to DB Equifax Experience. That's 3 payment experiences. Tractor Supply reports to DB and Equifax. It's 2 payment experiences. At this point, you need 9 total accounts or 14 payment experiences, and all these tiers of credit start to get available for you. Sam's Club, Sutherland's, for example. You're able to come in here and get Menards, right? Build business credit and be able to get all the stuff that you need to be able to rehab, to maintain the properties that you actually have. Okay, so a lot of funding you're able to get on this part of it as well. Now, okay, so we got some, okay, so somebody had just said, Serena says, is the presentation recorded? It is, Serena, you're on Facebook. So if you go to the Facebook channel you're watching on, one of our groups, one of our pages, you can rewatch this. It's always available at facebook.com/credit suite too, so you can play it back. Phase 4, maturity. Now you're making millions in the business. And at this point, now we're looking at, the most advanced vendors. We're looking at equity investors. We're looking to exit in the next phase as well. So in the next phase, we're looking at making it easier to get term loans, easier to get SBA loans. We've got more people at this phase that want to come in and buy the business that we built, right? In this phase, we've got people that come in that actually want to give us money. It happens quite often. Like once you get above that threshold of 2 million, and here I'll show you this realistically of what happens in this world, because I get this stuff all the time. So here's just 2 examples, right? Okay, here's one from yesterday. Okay, and this is a guy who says, hey, I recently, learned about Credit Suite, Hey, I basically want to acquire your company. I want to buy you. Okay, and we specialize in this kind of financing, and this is the kind of business we're looking at. Let's talk more. So this stuff is actually very common. To show you how common it becomes, this was yesterday. This is Justin today. Justin says, hey, hope you're doing great. Congratulations on building, Credit Suite. We want to buy your business, right? Buy your business. We're very interested to speak with you. We're looking to acquire a company here in your sector. So what happens now at this point is you start to get these people that want to buy your business or invest money into your business because, man, it's just easier. Like it's way easier to buy an existing business or buy into an existing business than start one from scratch. That's why there's this whole new blow up of world of people that are buying businesses, right? Because it's easier to buy than build. There's even a great book called, Buy versus Build. That's that name that I actually read. Great book on this topic. So now you got more people wanting to buy the business. More people are wanting to invest in the business in this phase. And then as you continue down that road, you're going to want to exit. And now, if you've done what I've said, you've set the business up where it's fundable. You've got your business credit built, increasing the value of your business. You got all this credit for the business without a personal guarantee or credit check that can get transferred to the new owner. You've been able to qualify for financing. You got credit lines set up in the business name, loans set up. So it's really primed to exit or bring in outside investors to sell part of or all of the business because you built it all. You're making millions. You've made it in this space. You've got all this capital available to continue the growth of the business. And in this phase, you're able to get financing through SBA for the acquisition. You can get 80, even 90% of the acquisition of your business paid for through SBA. So if I want to buy your business, I can get an SBA loan now because you did all the things I said. You got up your business where it's fundable. You built your business credit. Now you're primed for an SBA loan, whether it be to get an SBA loan to expand the business or an SBA loan to buy your business. Now you're able to actually come in here and exit and be able to help somebody get financing to buy your actual business. So that's kind of a walkthrough of all of the different phases that you're actually going to want to know through this process. Now, Dia says, have you done a best 10 business checking account video? We haven't, but yesterday we talked a lot about checking accounts. And last week I had a video on my top 5 best checking accounts. So make sure you check it out, youtube.com/credit suite. So look, to recap, there's different funding you're going to need all the way through this process. We talked about setting up your business where it's fundable. We talked about every tier of business credit building. We talked about credit line hybrid, 401k, securities-based financing, house flipper financing, which works right from the beginning of your business. Everybody says, you can't get money for real estate investing. You can't get money as a startup. I gave you like 10 different options that work for you in phase one. Then we get into the phase two. We start growing the business. We start getting revenue, right? And then as we start getting into revenue stages 2 and 3, then we start having cash flow coming in. Now we can get cash flow financing and merchant cash advances and fund box and blue line credit lines and all this revolving credit lines and loans. Then we start moving into the final tiers. We start getting SBA loans and term loans and alternative loans with longer terms, lower rates. And then we move all the way to exiting and bringing in people that want to buy our business or contribute exit or contribute capital just because we built something awesome. Now, next time, and I thought I was going to cover that today, but I didn't, we're going to be diving into charitable business credit cards. So we will be covering that this week where you can give back while getting the business credit that you need. And don't forget, this doesn't have to be complicated. Just give us a call. What's nice about Credit Suite is that we've got a paid program where we'll, expedite your business credit building like that. We'll take a 3-year process and condense it to 6 months. And a little secret, it's cheaper to work with us than do it on your own. There's all kinds of stuff we give you for free or massive discounts that you'll pay considerably more for trying to do this on your own. So it's cheaper and easier for us to build business credit. We got people that'll fund, that will finance your enrollment for you. You can pay it one lump sum. You can pay over payments. We've got ones where you could do it yourself. We've got all kinds of options on no matter what your budget is to be able to build business credit, improve fundability, work with our funding team. But we also can help you for funding for free. You can give us a call for a free finance assessment. We'll tell you all the funding you can qualify for right now. We never charge you a dime of money to get funding. None of it. All the funding we talked about, we can help you get to a source that can help you with that. And or most of it, crowdfunding, some of the stuff we don't do. Most of it we do. And we don't charge you any money. We don't roll in fees and points and get charged front end, back end. As a matter of fact, it's cheaper to work with us because we do so much volume with our lenders. They give us discounts we pass on to you. So it never costs you any money to get loans and financing through us. Give us a call for a free finance assessment. We'll tell you all the funding you can get now. We'll do a fundability assessment to help you get your fundability fixed, repaired, working correctly. We'll help you get your business credit reports at no cost, give you tips and tactics to build out your business credit 100% free. Give us a call at 877-600-2487 or go to creditsuite.com/consult to schedule the consult. If you got value, hit the like button. That's all I ask. Hit like, hit love, share this so we can help more people together. And then don't forget to check out our other social channels. We have daily tips on Facebook, on Twitter, on Instagram. We have 1-minute videos that give you all kinds of valuable information on TikTok and Insta. We have thousands of videos on YouTube. I have a podcast you can listen to on the go. You can get it all at creditsuite.com. Literally takes you less than 1 minute. You can go to creditsuite.com right now, click the social media icon, boom, and I want to like and subscribe. Then you'll get notified when we go live. Like all we care about is getting money for your business. That's it. That's all I do. All I'm here doing is talking about every different way you could think about to get money to fund your business. So if you have any interest in getting money now to start a business, grow it, or to scale, eventually help people even sell the business and get financing all the way through the process, that's all I talk about is all the ins and outs. You could play this thing behind the scenes during your day and be able to get all kinds of insights. So if you want to do that, go to the top right of the page, creditsuite.com. Okay, so I am going to, and you can go to creditsuite.com/follow as well to follow us on your favorite platform. And if you're keeping an eye on the chat, our team has put in all kinds of insight that's going to help you today as well with knowing all kinds of links that we talked about to be able to get approved for a lot of the funding we discussed. So thanks for tuning in. Look forward to talking to you next time about more cool ways to get the money you need to start and grow your business. If you have any questions along the way, give us a call at 877-600-2487. That's 877-600-2487. And again, we are here to help you all through the process of being able to get funding to grow your business. So I look forward to seeing you on our next training where we talk about, again, more cool ways to get money to start and grow your business. If you have any other questions, give us a call at 877-600-2487. That's 877-600-2487. And I appreciate you tuning in. Thanks. Have a great day.